Hey, how's it going, guys? Welcome back to mentfx, and in this video I want to actually talk about something that I deem somewhat important and a question that I get asked a lot of the time, and that stems from the question of which market should I look at, what's the best one with smart money concepts where I can really, do my back testing and begin to learn. Now the truth is there is no one market that's the best. Every single market that exists that moves up or down will have traces of smart money present in it, and as an institutional trader, you should be able to spot that, analyze it, predict it, and trade and execute under a specific bias that you have, right? So in the last few days, we've been looking at a lot of Bitcoin. You can see that I actually was expecting a buy from back here, and that just went to shit very quickly. I think it was based off the accumulation here, which was also based off of some demand zone here, and now it's coming to this zone here, and we've begun to enter positions here. So we made back what was lost here on the first partials. There was another opportunity here. I did not take this, but it was perfect. I usually don't take re-entries unless I don't have a trade running. So, but this trade right here, this original one is actually locked in here. But the point of this video is to explain to you guys that it really isn't important what pair you look at, whether you're looking at Bitcoin or a cryptocurrency. The way the market responds will be the same. The areas that you begin to look at based on a higher time frame are going to be the same areas of demand and supply that are again formed after liquidity has been grabbed from a certain area. Those demand zones are formed. Again, you have inefficiency left behind, and those areas facilitate an area where weak hands can be transferred into strong hands in the form of Wyckoff on lower time frames, which again, you can use the rule of 30 if it's something that you want to use. And as you make your way down, you will see that rule of 30 begin to play out perfectly. And as you get lower, you see a much easier way to read it. And again, inside of here, you have more Wyckoff. Inside of here, you have 1 minute Wyckoffs, and you have this occurring absolutely everywhere. To prove it, I myself only trade gold. If you take a look at gold, gold has been doing relatively the same thing. We've had a great week on gold, with the exception of, so there was this thing that was at the beginning. So there was this loss right here. There was a win inside of it before the loss got hit, and there were some wins here. For those of you that are new, definitely begin to keep a journal. So I keep a mini journal, something very simple. You can just copy and paste this down and understand how to journal like this. This was just this week right here. You can see we started off the week actually with 2 minus trades. So we had this buy right here. And you'll notice that just went to shit very quick. So this was also the exact same thing that happened on Bitcoin, right? We were expecting higher prices. It just happened on XRP, so that's just Ripple. Gold 30-minute chart. You can see we had this expectation with sells here into these buys. I was very worried about these equal highs being taken out. So no shit, we lost that. Took a loss on that right there, as you can see. If we can find that. So that's this loss right here. That's how I show it. If we go into here, we had a 1 minute buy on gold, sell on gold before that upper entry. You can see that the sell was at this last up move before the down move. I'm just looking to sell that into this demand zone right here. And if we take a look at what occurred there, that hit came in perfectly. It actually dropped even lower into the demand zones down here, but your system should be built around the way you're willing to execute it. Okay, we keep moving. Another gold trade on the 15-minute this week. We had price begin to break down on a lower time frame here. You had great Wyckoff. If you want to go analyze that, you can. The last up move before the down move, again, leaving behind some inefficiency, looking for a test to continue lower into this larger demand zone. So if you notice, we were targeting about 50% of the zone down here. And if we go over to the aftermath, that was this right here. So you can see that last up move. Price came up into it and perfectly delivered just under this low, which was put in before the entry. So that's where we were looking to completely take our position out. And at the same time, you can see that this same setup right here that you saw with the sell into this buy actually played out perfectly on the buy side. That was this one right here. So this was that sell. That one was the one that lost. That came down into this buy, targeting this last up move before the down move, and you can see price deliver there perfectly. And I think actually if anybody held this broke significantly higher in the next few days. So if we take a look at this, you can see that this was that trade. Never got below. I took out, but if you had remained and caught it all the way up, that was a great trade. However, we don't bullshit. It was just this last up move before the down move. Then inside of here, I was actually expecting some sells. There were some very short-term sells on the 15-second chart, I believe. So we can take a look at some of that really quick. Actually, we might have it drawn here. Yeah, so 30-second charts. You can see this right here with this original sell at the last up move before the down move right here. Okay, and then if we go right here and take a look at that, that's that first sell. You have partial plus break even here, and then that got hit a break even. However, that also facilitated this entry right here, which if I can probably show you this, there we go, which facilitated this entry too. So at this point, this had already gotten partialed and broken even, but at this point as well, we had new Wyckoff form right here, distribution, the breakdown, and we're looking for this to come back up, give us an entry here, and then continue lower. And if we just take a look at this very quickly, you can see we came right up into there. That's that lower area. Came down the partial and BE at the first area, came a little bit lower, didn't really get a second partial in, came right back up, and then stopped us at break even. And as a result, right after those two, as you can see right here, so we can go down to the 15, 30 seconds. Those are right there. You can go analyze that on a lower time frame. You'll see the Wyckoff in here, even on a 15 second, I believe. So there's Wyckoff right here that broke down, and we got tests of those areas. And then after that, I believe price just marked up very aggressively. Right, yeah, so there you go. Price marked up very aggressively, but despite this markup, there were still opportunities to get into sells inside of here, right? So the point of this video, and what I'm trying to allow a lot of you new people, or even members that have been here for a while to see, is that no matter what market you look at, there will be opportunities present along the exact same footprints and analysis-based smart money things that we do, right? So institutionally, you're always going to have areas of supply and demand form in markups and markdowns, whatever it may be. And as these areas form, what you're going to have is you're going to have price that comes back down into those zones that begins to accumulate, right? Those big accumulations become very, very tiny accumulations in smaller areas. And again, this can happen during session times, but we don't do sessions because we understand that price is not based on anything except for what the composite man wants to do. These breaks higher, new re-entries, continuations significantly higher to look to partial at highs as potential areas of liquidity, at highs as potential areas of liquidity, and new, completely new structural highs, in which case we again assume this bias and continue going higher, which is actually why we are right now buyers on Bitcoin specifically, right? So if you notice this on the daily, my first buy, this one right here, was based off of this zone right here, which actually had a great mitigation, and then I was looking for it to buy up a little bit higher. However, that didn't happen, and we had a breakdown. Now we're in this zone here, and we got, like I said, another buy inside of there off of the Wyckoff that occurred here and the Wyckoff that occurred here, that is now playing up higher. Now, again, what is the purpose of all this? It's that there is no one pair that is going to deliver you the best smart money results. The reality is you need to recognize that the way the price moves is going to be the same across all markets. The reason I prefer to study gold, right, is because on gold, what you actually get is a lot more movement. And because there's a lot more movement, even during like Asian session where technically there is really zero movement, you can still catch very large trades because of the amount of pips that gold moves, right? And on top of that, because it moves so many pips, the lots you are using when you are putting on risk are lower than any other currency, which also means that you pay less commissions round trip for putting on positions on gold. Now, just like we saw this gold markup and all the trades that were possible inside of these areas that are, again, in line with higher biases. And, you know, for any of you that have a bias on gold, you can just take a look at this. Maybe you have something similar. As you work your way through multiple markets, you'll notice that the delivery of price is ultimately the exact same no matter what. Okay, so everything will deliver itself in a way that is similar to another market. We can, like, even GU, we actually looked at this with the team on Sunday. We were expecting basically buys from here into here. However, that didn't happen, but also there was no confirmation on it. We had the breakdowns into these zones, had the buy confirmations, and now we're running on those buys right there. Again, I don't trade GU, but we looked at this with the team prior to the week starting, and everything is playing out as according to plan. I looked at this with a one-on-one client that I wanted to that I was just helping out take a look at CHFJPY, so I left it on my watch list because, you know, I took a look at it, and we expected this area to be filled. I think it's a inefficiency on a higher time frame. We had that filled perfectly. As it broke higher, there were opportunities in here and here to go long. I didn't get those. However, what I was expecting was shorts from these areas right here. And as price broke up into those zones and distributed on lower time frames and began to break down, those were perfect entries into the buys that I wanted to see here, which, as you'll see, there was another perfect entry inside of here. That was a buy, so it's actually on a much, much lower time frame. I'll show you guys that in 1 second. So take a look at that. So inside of here, you can very, very well see the Wyckoff that occurred, liquidations, the breaks higher above all structure, the moves right back to the last down move before the up move, the perfect entry, the partials, the partials. Then we were actually expecting partials, I believe, right here. So I don't think that ever got hit. Let's take a look. Yep, it didn't. And then it came back to break even, as you can see right here. So again, this is an example of how a trade could have ran, whatever this is, 1 to 20, even higher, because I was expecting it to actually come up into here. So it's because it easily ran 1 to 27, but instead it only ran to the partials at 1 to 5. Now, on the other hand, this one, we again partialed along the way at certain lows, such as, I don't think it was even that far up. I think it was even lower. So if we look at this, there was actually a partial probably here, about 1 to 2, a partial at about 1 to 6, and then your final that ran about 14.5, right? So it's not actually 14.5 RR. You're actually making whatever the partials and the math behind that is. So you guys can go do that yourself. I like to partial 50% at every single area of the original position. And as we can see, our bias is somewhat in line, marks its way up. Really no setups right here, and then it was end of day. So basically start of next week, we either look for the retracements into the areas down here or down here for those buys up in to the higher areas, at which point we will begin to search for those lower time frame ideas for a short entry to take us somewhere back inside of whatever forms in price action here. Now, again, as we're doing this, notice that no matter what we look at, no matter what market we look at, so this I actually analyzed a really long time ago. I believe it was just of a higher time frame because some client asked me to look at it. So if we take a look at this, yeah, we're very easily, I just said, you know, you see this impulse, take that last area, expect it to be mitigated, and then higher prices. Now, again, you're getting that you're having that happen right now, but at the same time, you're getting pretty big distributions inside these areas. So these buys, if you were to be getting into them, you should again be cognizant of the fact that we have the supply zone that we should target for potential shorts to continue short into some deeper areas before these high areas are met. Otherwise, as you partial, if prices do continue to break higher, instead of coming to hit your break even, wherever that may be, then you can expect prices to continue higher into these zones, in which case, fantastic, and then you can look for new things, right? But the point is, notice how I'm switching between multiple markets with ease. And as I switch between these multiple markets, the way that price is moving and the way we anticipate price to move and the way we anticipate confirmations using Wyckoff in certain areas like this or structure, right? Whatever it is that we look at, even XRP, right? XRP is moving the same way. Gold's doing the same thing. CHF-JPY, expecting the same thing. Bitcoin USD, expecting the same thing. Silver, expecting the same thing. We can do this with anything. We can do this all day. We can take a look at like Apple, right? You can look at a random stock and slightly different. Okay, this doesn't matter. You can take a look at a certain stock and just take a little gander at what's going on, and you can notice that the exact same things are again present even in the stock. I'm not going to look at Apple right now. Actually, I was looking at this with someone expecting buys from these areas or something a while back. But the point is, the way you look at a market and the way you expect retracements into certain areas of inefficiency, the way you look for the transfer of the weak hands into strong hands is going to be consistent and concurrent across all time frames and across all markets, which means that what you should do as a new Wyckoff or smart money trader, or even an advanced one, is pick a market and stick to it, because you're going to miss moves if you're looking at more than one market or even two markets. That's why I only trade one market, because I miss things if I don't, because the delivery of price is always going to be the same. There is no one market that gives you more setups than another. Okay, the reality is all move in consistency with inefficiencies being met, liquidity being manipulated and liquidity being created, and the transfer of weak to strong hands. So hopefully this video helped some of you that have been, wondering which pair you need to really focus on. If it did, fantastic. Really happy about that. If you want to pursue this way of learning and go further, then you can leave the video now at this point because you guys are probably bored. But you can check out the mentorship, launchpass.com/mentfx/mentfx. That's the only place you can join. That's the only place it's ever going to be available. And you can get deeper with me, do some weekly outlooks with me, probably, talk with me, whatever it might be. But if you take anything out of this video, just recognize that every single market will deliver price to you in a way that is institutionally based. And you are going to be able to see the footprints in any market whatsoever. And as a result of those footprints, you're going to be able to see the transfer of buys to sells and sells to buys, weak hands to strong hands, always over and over again on repetition in this market. So hopefully that made some sense. Hopefully you guys take something out of that, and I'll see you guys in the next video. Thank you.